All right, let's jump right in. Today, we're unpacking the digital dollar. We're going to look at the tech behind these things called stablecoins and build a really clear investment case for why this market is becoming a massive deal in global finance. So, this quote right here, it really nails the moment we're in. The entire landscape is shifting under our feet thanks to new regulations, and that shift is creating a unique, time-sensitive window for investors. It's exactly why you need to understand this space, like right now. And the scale we're talking about, it's just staggering. $3.7 trillion. That's the projection for this market by 2030. To put that in perspective, the amount of money moving around on stablecoin networks is already starting to rival giants like Visa. So no, this isn't some niche crypto thing anymore. It's becoming a fundamental part of the global financial system. So here's our game plan. We've touched on the sheer size of the market. Next, we'll dig into the broken system that stablecoins are here to fix. Then we'll get into the nuts and bolts of how they work. After that, we'll look at the real-world use that's already happening at a huge scale. And finally, the big one, the institutional catalyst that could kick this all into overdrive.
Okay, first step, let's talk about the problem. To really get why there's a multi-trillion-dollar demand for a new kind of money, you first have to see just how clunky and inefficient our current financial plumbing really is.
I mean, if you've ever tried to send money to another country, you know the pain. It's a total headache. A wire transfer can take days to clear, the fees can be outrageous, and the whole process is just full of friction. For any business trying to operate globally, this is a constant drag. And I mean, look at this comparison. The difference isn't just a small improvement, it's a total game changer. You're talking about fees of less than a penny versus potentially $100. And speed? Instant settlement versus waiting 3 to 5 business days. It's not just a faster horse, it's a completely different technology. So how does this new technology pull it off? How does it provide such a radically better solution? Let's break down what the digital dollar actually is. This right here, this is the magic trick. It's such a great way to think about it. You take the US dollar, the most trusted currency on the planet, and you wrap it in code. You make it programmable. Suddenly, money can move at the speed of the internet, anywhere in the world, just like an email. So what is a stablecoin, really? Well, the key word for any investor is right there in the name, stable. Unlike other cryptocurrencies that bounce all over the place, a stablecoin is engineered not to move. Its value is pegged one-to-one with a real-world dollar, and that peg is backed by actual audited reserves. We're talking cash and super safe US government bonds. But how do they keep it locked at exactly $1? Well, it's not magic. It's actually some pretty clever financial plumbing. Think of it like a digital bank vault. When a big institution wants to buy in, they wire, say, 1 million real US dollars to the issuer. The issuer puts that cash in the vault and creates or mints 1 million digital tokens for them. If they want their cash back, they return the tokens, which are then destroyed or burned. This keeps it perfectly balanced. And if the price ever wobbles to, say, 99 cents on the open market, traders jump in to buy the cheap tokens and redeem them for a full dollar, making a quick profit and instantly pushing the price back to $1. It's that constant arbitrage that keeps the whole thing humming along perfectly. Now, you should know there are a few different flavors of stablecoins out there, but honestly, for this conversation, we are laser-focused on that very first category, fiat-backed. Why? Because they are by far the most stable, the easiest to understand, and, most importantly, they're the ones that institutions and regulators are actually getting comfortable with. Okay, so the theory is solid, the tech is clever, but does it actually work in the real world? Oh yeah. The big story here is that this isn't just a concept anymore. It is already operating at a massive global scale. So let's just pull back for a second and connect the dots. When you put it all together, the why this matters becomes crystal clear. It's not just a better way to send money. For millions of people in countries with shaky economies, it's a lifeline to the US dollar. And for us, from an investment perspective, the fact that it is this close to getting the full regulatory green light is the final crucial piece of the puzzle. And here's what's so fascinating from a market structure standpoint. It's not some fragmented, chaotic space. It's basically a two-horse race. You've got Tether and Circle, and together they control almost 90% of the entire market. For an investor, that simplifies things a lot. And get this brings us right back to where we started. Remember that big, inefficient problem we talked about? Well, look at what traditional banks are saying they want to use stablecoins for. Cross-border payments, by a huge margin. Even they know this is the future. There's also a really powerful geopolitical angle to all this. As these stablecoin companies grow, they have to park their reserves in safe assets. And what's the safest asset in the world? U.S. government debt. So they buy billions in U.S. treasuries, which helps fund the U.S. government and expands the dollar's influence around the globe. It creates this incredible self-reinforcing feedback loop. Which brings us to the main event. The single most important catalyst. We've seen the problem, we get the solution, we see the massive scale it's already at. Now let's look at the one thing that's about to open the floodgates for institutional money. So, what's been the one thing holding all the big money back? What's kept institutional capital on the sidelines? Well, according to a recent survey, 57% of investment advisors all said the same thing: regulatory concerns. It's been the big question mark hanging over the whole industry. Until now. And this is the solution, the Genius Act. The goal here is simple: create a clear federal rulebook for stablecoins. It demands things like strict one-to-one reserves and monthly audits. And crucially, it bans something called rehypothecation, which is just a fancy way of saying issuers can't take your money and go gamble with it. For institutions, this is the green light they've been waiting for. So what happens when you finally get clear rules of the road? Well, it's pretty easy to predict. The big money doesn't just trickle in, it floods. And where does it go? It goes straight to the safest, most transparent, and most regulated players in the game. You get a massive flight to quality. And you don't even have to guess what this looks like. We have a perfect case study playing out right now with Circle, the company behind USDC. They've embraced regulation from day one, and the results? They speak for themselves. $60 billion in circulation, a monster IPO that was 25 times oversubscribed, and they're already profitable. It proves that this high-margin compliant model works at an enormous scale. So that's where we are. The tech works, the market is huge, and the final wall, regulatory uncertainty, is coming down. The flight to quality isn't some future prediction. It's already starting. The only question left is, how are you going to position yourself for it?